So I put out a video last week about the electric car company NIO after some news had broken out that Citigroup and JP Morgan had upgraded the stock after a string of recent successes in deliveries, and the stock went on a tear and actually jumped up to around $28 per share. The stock had actually been performing quite well for a number of months leading up to last week. But there is a lot to unpack with this stock, so I'm going to take it one video at a time. And in this video, I'm going to talk about one of NIO's stated key advantages, which is in their battery swap capability, which basically means that a driver can go to one of the battery swap stations, get their battery changed in about 3 minutes, which is less time than it takes to fill a tank of gas, and certainly less time than it takes to charge an electric vehicle with traditional charging stations. Question is, exactly how much of an advantage is this for NIO's electric vehicles compared to other electric vehicles on the market that depend on traditional charging stations? For the answer to that, you're gonna have to watch till the very end of this video, so stay tuned. Hey folks, Richard Walls here, helping you with career development and personal finance. If at the end of this video, or really at any point in this video, if you decide you like what you see and you want to see more content like this, make sure to hit the subscribe button down below along with the notification bell so you get notified of when I post new content. And while you're down there, you might as well go ahead and hit that like button. So with that said, let's get to it. In my last video, I got a lot of colorful comments from what I imagine to be hardcore NIO enthusiasts that thought that I had besmirched their beloved investment. And it's not exactly true. In fact, you can check out the video for yourself in the link in the description below or the card above. But the general message I was trying to drive home was to temper your enthusiasm and don't just invest in the newest, hottest EV company just because it's been upgraded, the stock price is going up, everyone's excited about it. It's in a market that's continuing to grow. But again, you have to do your due diligence because it is still a new market. You have a lot of companies flooding this market. And in fact, in China, it's estimated there are about 500 new EV companies that have been registered. That is an insane number. And in all likelihood, many of them will fail. That's just the law of numbers when it comes to companies and success rates. But when it comes to NIO, there's still a tremendous amount of risk. And as a Tesla shareholder, I still say the same thing about Tesla. But one of the reasons that many investors are hyped up about NIO, apart from their recent successes in growing their delivery numbers, I mean, keep in mind, they're actually one of the few EV companies, pure EV companies that are in production. They are manufacturing and delivering vehicles while a lot of other EV companies are still in the concept phase or still in prototyping. But investors are excited about some of the technology, some of the IP that NIO has. And one of those pieces of technology or capabilities is battery swapping. This capability matters for 3 reasons. The first one is that the time for drivers to get a full recharge, if you will, via the battery swapping is about 3 minutes. They park into any one of these battery swapping stations. The process is completely autonomous. You don't have to leave your car. The machinery actually changes the battery for you and off you go. This is less time than it takes usually to fill a tank of gas and substantially less time than it takes to charge an electric vehicle through charging stations. And I'm even referring to the most recent V3 supercharging stations that Tesla has, which states that you can charge a Model 3 long-range vehicle in about 15 to 20 minutes all the way, which is still pretty incredible, and it's come a long way. It's not 3 minutes though. The second point is it allows drivers, and this is actually a selling point, but it allows drivers to take advantage of new battery technologies that may come out in the future so that effectively they're not stuck with an old generation battery. As soon as they go to one of these battery swapping stations, presumably if there's a new battery model, then it will be changed with that. And so you're not stuck on, again, an older generation battery. Third point is it gives NIO another path to monetization with what they announced recently as battery as a service. It's a leasing model that customers can select at the point of purchasing a vehicle. Now, what's interesting with battery as a service is that when a customer goes to buy a vehicle, they have the option to select that service, and in return, they get a substantial discount on the vehicle itself to the tune of what equates to around a little over $10,000 USD in exchange for this battery as a service, which from what I can tell and gather is a service that costs about $142 USD per month. Now, there's a handful of benefits associated with battery as a service, and I'll provide a link down below so you can read a little bit more about it. But the net of it is, for customers, it reduces the upfront financial burden of them buying the car. It potentially introduces more people to the brand that maybe previously couldn't afford it without this substantial discount. And then for NIO, it improves or increases the customer lifetime value if they do opt for batteries as a service. And with some simple math, you can more or less deduce that it'll take a little over 6 years for NIO to recoup the cost of the discount they give up front, not factoring in inflation or anything like that, but it takes about a little over 6 years. After that point, everything is incremental. Now, as far as infrastructure and deployment of these battery swapping stations, it's modular by design. It takes up about 3 parking spaces and can be assembled and disassembled fairly quickly. So if for whatever reason a particular station has a lot of demand, they can simply put another station next to it, provided that they have space. Conversely, if a station is not seeing a lot of demand, NIO has the ability to simply pack it up and move it somewhere else where it might see more demand. So it's not perpetually fixed at one location like a charging station might be. So this seems like a pretty versatile and robust solution that's actually working out. And what's also very interesting is Tesla attempted the very same thing, maybe not in the exact same way, but they attempted a battery swapping station of sorts many years back, and they opened it up to a select number of customers, a good handful of customers, and they simply didn't see a lot of demand for the battery swapping capability, so the project was scrapped in lieu of just developing their charging stations. But it seems like NIO has figured this out, and as of August, according to one of their latest press releases, they had completed about 800,000 battery swaps to date. So while it didn't succeed in the US with Tesla at the time that they had done this, it's certainly seeing plenty of demand in China today. All that said, how much of an advantage is this battery swapping technology for NIO? Well, in the short term, it is certainly an advantage, but when you look at the long term, not so much, and here are 3 reasons why. First is whether it's advances in chemistry or architecture, battery technology in the market is improving, which means that customers can go longer without having to recharge their vehicle. For comparison, if you look at a used 2017 Tesla Model S long-range variety, which has a 100 kilowatt hour battery, at that point in time, the EPA estimated range was about 335 miles. But when you compare that to the Model S's of today, you're seeing with the same battery, a 402 EPA estimated mileage. Now, whether that rate of improvement continues to stay the same, which doubtful, however, Tesla is investing quite a bit into new battery technology and specifically architecture so they can fit more battery within the same space. You can expect to see improvements without a doubt. And Tesla is not the only company exploring improvements in battery technology. LG and Panasonic, they're doing the same thing. Second point is charging capabilities will continue to improve in the future. They've made a lot of progress already in the last decade or so, going from the V1 chargers, which took forever to charge a car, to the V3, which, as I mentioned earlier, you can charge a Model 3 long-range vehicle in about 15 to 20 minutes. So they've come a long way, and we can only expect that the rate of charge will continue to improve so you don't obviously spend as long charging your car. Now the third point, and this one is key, NIO itself is developing a supercharging network in parallel to the battery swapping station network, which tells us a few things. One, of course, we know that it's aligned to the company's strategy, which is to give customers options when it comes to power. But the second part of that is it's sort of a hedge against the possibility, which I consider a very real and not so distant possibility, that these battery swapping stations won't have much of a place when, again, the battery technology comes even farther and the charging capabilities improve as well. So all in, the advantages of battery swapping are very apparent today, but I'd argue that in the course of the next 5 years, that advantage will be diminished. What remains to be seen, though, is if through this advantage and through battery as a service, they're able to capture enough of a market now and establish that foothold in the marketplace and establish a customer base before that advantage goes away. All I can say is only time will tell. But folks, let me know down in the comments below what you think of this battery swapping technology and how you see this as a competitive advantage out into the future. Again, let me know in the comments down below. With that said, thank you for watching, and I'll see you around.